Hello, and welcome to another update video about Pepe. So yeah, on the Pepe chart, we have seen now an extension to the upside. I mean, yesterday I already gave you the next, let's say, upside Fibonacci levels to watch. The question is, how useful are they? Because we're dealing with, let's say, unclear extensions. I mean, it is quite a wide upside extension that's forming there in this internal third wave. Nothing that's unusual in crypto, especially in meme coins. You see this. But the next levels start at 274473. I mean, it's just some levels to, just some levels to watch. I mean, if the price goes higher very aggressively, then, they are more like areas to watch, especially when we have coins that are super volatile. But yeah, 274473, 307805 are the next levels to watch. And I'm watching for a 5-wave pattern to develop here. So down there we have this wave 1, wave 2, then an A, B, C, and wave 3. That C wave seems to be an impulse, possibly, and it is extended. Yeah, there are other ways how this can be interpreted. I could shift the wave to here. It doesn't make a great difference in the short term. But what I can tell you is that my assumption is that once this third wave is done, the fourth wave will take time, right? It will take some time. So that is because it's so extended. You see how long this correction was, right? Between May and August. So it can take time, right? Maybe at least I would say 4 weeks or so. I mean, it's difficult to say, but these movements typically are followed by strong corrections. I mean, it doesn't need to be deep, but sideways, boring, right? So just be aware of that. This is now the uptrend that people waited for after the price reacted to both support zones. Do I need these still? No. So I will take them out now. Want to keep the chart clean. Don't need the unused, not unused, but they were used. We don't need the ones that are not relevant anymore on the chart. Delete that one. I mean, now is obviously not the time to buy a low risk position. You can still buy, you can trade, if you want that, that's up to you. If you want to trade this move up still, but the risk is high now, so it's not a low risk trade. The next low risk trade could happen in wave 4, pullback wave 4 for the wave 5 to the upside. As I said, the third is likely still unfolding, but this is now where it's getting more and more difficult, but it could still extend a little higher. I'm going to show you why. But why is the risk high? The risk is high because the main support area for wave 4 is now located between 108,996 and 186687, which means that if this is the correct wave count, this is what we have to allow a wave 4 to do. Pull back and rally, okay? Doesn't mean it has to do it now. Actually, it would actually be easily possible. It extends higher a little bit more directly. We'll take a look at that in a minute. But it's just highlighting the risk, that's what it is. We're just highlighting here the Elliott wave pattern, and it would look best with another 4-5 pattern. That's all I'm saying. But then this 5th wave could form a long-term top. So it's just something to be very much aware of. Until now, we've been watching in this cycle for one more high. That one more high happened, all right? So if anybody followed my Pepe videos in recent months, you know that we were watching for one more high. But now that we are there, we need to look at the microstructure, and this move up that started in August, would look best with another 4-5 pattern. That means with another higher low and another higher high. So that's the idea. I mean, below the 61.8 retracement, below that 108,996 level, I don't really have anything clearly bullish left. That's the thing, that's where everybody needs to be aware. We could get it, we have to allow it to pull back in this Elliott wave pattern, but what happens if it breaks support? So do I accept that drawdown down to support until I know that something more bearish is playing out? But again, it would still look best with another 4-5 pattern. Looking at the shorter time frame, I mean, I shared another micro support area with our members earlier today. If you're interested in checking that out, you'll find our membership options and also the TradingView live chart in our silver and gold memberships. And as gold members, you get additional updates, and you can check that out on our website. The link is in the description. So again, for anybody who's interested in some more frequent updates, check it out. But today I thought I'll create another Pepe video for you as well. The idea is that this pullback, why do I say further upside continuation is possible? Because this pullback looks like a 3-wave move so far. Yeah, it looks like a 3-wave move. So it's difficult to say really, you know, because this is, you see on this small time frame a lot of distortions, but this doesn't look like 5 waves. Yeah, visually maybe, but you have overlap. So it looks more like a small ABC structure. For example, here you could say A, B, C. Yeah, where the A wave itself is a 3-wave move, then a B and a C. So what I want to say is, you know, this is a 3-wave pullback. There are certain levels to watch on the smaller time frame, but we don't have a, I mean, I would show you a micro count if I had. There is no clear micro count here. So I'm just looking at price action, say, okay, looks a bit like a 3-wave pullback. And you can use the last swing low, for example, or the fib levels that I shared. But the main takeaway is at the moment we seem to be in a local downtrend. But then, for example, a trend line breakout might be an indication we push a little higher. Yeah, but it's you know, the reward to risk profile has changed significantly since the price reversed in these support regions, right? So there are still plenty of coins, plenty of setups that haven't broken out yet. I shared a few today as well on Discord, but you know, on YouTube as well, right? So again, they are being shared. The key is just to act when, you know, when you like a setup and the price is in support, then you have a low risk trade. Now, if you choose to take a high risk trade like this one now, where the reward to risk profile is obviously not as favorable anymore as it was in August, then yeah, I mean, you can do that. Just note that you need to be happy with that decline into the support area should it start. And that is so, it is therefore so important to calculate position size, to be proficient in position size management. So you just need to be aware. You just need to be aware how much you want to risk, really, and then measure your risk to support. From an Elliott wave point of view, I mean, maybe you have a different edge, maybe you have a different indicator you watch, and you just want to use that Elliott wave layout here, or the Elliott wave structure, just as confluence, for confluence. Yeah, that's the update about Pepe. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.